Did you need mortgage insurance when you bought your home and now you want to lower your payments by getting rid of it? Or are you a real estate agent seeking to better assist your clients with mortgage insurance questions? If so, this is certainly the place for you as we're diving into all the ways to get rid of your mortgage insurance. Hi, this is Joe Harris from Morgan Financial. I'm here with my buddy, Nick Morgan. How you doing, Nick?
I'm doing great, Joe. How are you?
Good. We're talking about getting rid of mortgage insurance.
Yep. That pesky mortgage insurance that you may or may not have. Just going into ways that you can maybe completely take away that payment.
Yeah. Well, I mean, mortgage insurance is, people say, oh, mortgage insurance is terrible. It's actually not terrible because it helped them get into the property with a lower payment, right? Or lower down payment. And it's a tool.
For sure.
And so now if there's certain situations you can get rid of your mortgage insurance you might not know about, that's what we're here to talk to people about. So there's ways to get rid of your mortgage insurance, potentially, lower your payment, and why not do it?
Yeah, absolutely. Yeah, if you can do it, I think it's good all the way around, right?
Right.
So I think the first thing that we should talk about is, how do you, on a conventional loan, for example, because this doesn't apply to FHA. I think we want to touch on that. If you have an FHA loan, it's for the life of the loan. But for
in most situations,
private mortgage insurance, PMI, what is the requirements to no longer have that?
Okay,
mortgage insurance.
So there's a couple ways to get rid of your mortgage insurance. Okay, let's talk about the first way, which is the natural progression. Okay, so let's say you put 5% down on your property. When your loan naturally reaches 78% loan to value, okay, by the original amortization or payment schedule. No, so you didn't make any additional payments. You're not looking at the current value of the house. It's just based on it getting to 78% loan to value through that natural amortization schedule. It will automatically fall off. Okay. So whoever is servicing your loan, that's who you make your payments to. It's not necessarily who you did with your loan with originally. It's who you make your payments to. They're supposed to take it away. Now, I wouldn't trust them to do that, not because they're meaningfully or trying to mislead or do something to you, but it might have gotten missed or the automatic system might have failed. So watch your payment schedule. If you get to 78% loan to value based on your original amortization, it should drop off. If it doesn't, talk to your lender. By law, they have to get rid of it. Right. So that's the first way.
Right. Cool. I would assume that's the normal way that most people that happens.
Unfortunately, most people just let that happen and they aren't proactive to get rid of it ahead of time. Because the next way I'll tell you is once it reaches 80% loan to value, like a penny less than 80% loan to value, when you're under 80% based on your original amortization, you can petition with your lender to get rid of it. So you might be able to get rid of that payment sooner than when it reaches 78%. But you have to pay attention to that. That's the second real way to get rid of it.
Right. Look out for that 80% mark.
80%, once you're down below 80%, no extra payments were made, then you can petition to get rid of it.
Cool. Sweet. Now, can you get rid of the mortgage insurance by refinancing your mortgage?
Good question. So yes, absolutely. If you refinance your mortgage and you have enough equity or if you have enough equity in your property, equity is what the property is worth minus what you owe. That leftover piece is what's called equity. And so if your house is worth, let's use easy numbers. If your house is worth $200,000, let's use easier. If your house is worth $100,000 and you owe $80,000, you're at an 80% loan to value. So you have 20% equity. Technically, you shouldn't have mortgage insurance on your property. And so if you're refinancing it and you're at 20%, you're going to get rid of it. Now, if you're refinancing your property and you don't have that, then you're going to have the mortgage. If you don't have that equity in your property, you're going to have to get rid of it. But let's say you bought your house, 2019, and then values went, and you got a loan with mortgage insurance, your values went up, and now let's just pretend you can get a lower rate right now by refinancing. Well, you're going to get rid of that as long as you have that equity in your property. You're going to get rid of that mortgage insurance. That's on the old loan. The new loan won't have that mortgage insurance if you have the equity.
I gotcha. Cool. Now, speaking on equity, can you also then get rid of it by getting a new appraisal?
Okay,
how does that work? I've heard
it depends on the servicer and the mortgage company. The mortgage insurance company. They all have different means. We can put links to those down below, but just know that it's specific. All of what we're talking about, except the law piece. Like if you reach 78% loan to value by law, they have to get rid of your mortgage insurance. But some of these other things I'm going to talk about are a benefit of certain lenders or certain servicers and certain mortgage insurance companies. But if you have equity in your home based on appreciation, like now homes are worth more than they were 5 years ago,
Right.
and you're still paying mortgage insurance, but you have 25% or greater equity in your property, you can petition with your lender, and they'll typically do your servicer who you make your payment to. You petition with them, and they'll typically require an appraisal. There's typically a fee of $300 to $400, and if you have at least 25% equity, you've been a payment in good standing, they typically will allow you to get rid of your mortgage insurance. That is up to the servicer of that loan.
Gotcha. Sweet.
Yep.
Yeah, sweet. So then moving on, can I also then just pay my loan balance faster to get to that 78% mark?
Well, you can pay your loan balance faster to get down to 80%, right? And remember, the 78% is by natural amortization schedule. And so if you do it faster than that and you pay your loan down and your payments in good standing and all the other items apply to you, then you can look at petitioning with your servicer to get rid of that mortgage insurance. Typically, they'll let you do it. They have their own parameters, but as long as you meet those parameters, they should allow you to do that.
Cool. Now, what about home improvements? I've also heard if you improve your home, then you might have more equity, or is that how it works?
Yes.
Okay.
So good call. So let's say you bought a house and it was move-in ready, but it was dated, maybe had an older roof, older ACs, old kitchens, didn't have a pool. You put a pool in, you put brand new everything, new kitchen, new everything, and the values significantly increased. Well, now you can go back, and they want you to pay on it for a certain amount of time to prove that you're, a client in good standing. But if you meet their parameters and the equity is there, and they do a new appraisal and the equity is there, then yes, you could potentially get rid of your mortgage insurance that way as well.
Very cool. Now, we just talked about a bunch of different ways to remove it. Now, what is how do I go about doing that? The steps for PMI removal. Like, what do I do to do that?
Well, if you think you fall into one of the categories we just talked about, and again, we'll have a link to the blog on this that will have different places to reach out to. But the first step is calling your servicer, whoever you make your payments to, and say, hey, listen, I'd like to petition. Typically, it has to be in writing. But talk to your servicer and say, what's the process for removing my mortgage insurance? I believe I have at least 20 or 25% equity in my property. And they'll walk you through the steps with that particular system.
Okay, perfect. Sweet. I think that wraps it up.
Cool. Well, if you have any questions on this, if you have any comments, concerns, experiences, please put them down below or reach out to us directly. Even if we're not servicing your loan, we might be able to help you, give you some tips and advice to get you on the right path. So with that, thanks for joining us today. We'd love to see you next time. So make sure to like, share, subscribe, and we'll see you next time.